Well, thanks very much, Charles, for the over-egging. I've been a hack for 30 years, and I did indeed live in Lagos for 10 of those, which were, I think anyone who's lived in Lagos can vouch for the fact that's a formative experience. We're talking about the elections, or on my part, I know we're going to be talking about the economic consequences of the election. So I start with one of those irritating little comments a diplomatic correspondent asked me, and it went like this. He said, why is Nigeria so important, but on the other hand, so unimportant? And it was at a sort of evening gathering, drinks were flowing, and I sort of slightly jibbed at this, and what am I doing, wasting my time with something that's unimportant? On discussion, I could see the point. You've got a country of 200 million people, you've got world-class assets in terms of some of the most creative entrepreneurs in the world, certainly on the international finance side, on the high-tech sector, leave alone the world-class artists, musicians, you've mentioned Ben Okri, and a thriving civil society, and social dynamic. Yet, how much weight is it punching on the international stage? There's been a 30-year argument about who gets a seat on the Security Council, or which African state, but Nigeria hasn't been able to force the issue and get one for itself or get one for South Africa. You look at its position within the IMF and the World Bank. It's got a sort of semi-detached relationship. So definitely on the international stage, Africa is punching well below its weight. Nigeria is punching well below its weight, and certainly even on the regional stage, hobbled by various issues of insecurity within the country. It's struggling to get its northern neighbors together into a force to repel the rebel Boko Haram and now Islamic State in West Africa. So I would argue that whoever wins this coming election has a lot of work to do to bring Nigeria up to what it should be. The biggest economy in Africa, I mean that's the whole of Africa, and the most populous country in Africa, and many of the natural resources, let alone, as I said, the people to make it the success it should be. So I think that's part of the election rhetoric I'll get into now. So I'll start with the big picture, and essentially these elections, the presidential election and National Assembly elections in February and the state elections in March are, I believe, important in the sense that they're offering the Nigerian citizens a real choice for once, and a policy choice. There is a fair amount of unanimity about what the issues are. Capital is in short supply. To make this major shift, the diversification of the economy away from chronic dependence on oil, is about, my colleague will correct me, but I think it's something like 60% of state funds, from 60-70% state funds from the oil and gas sector, and over 90% of foreign exchange revenues. And this has been a mantra since the 1980s. But the present government under Muhammadu Buhari actually came in very much with the pledge to diversify the economy. It started off not as a matter of political wish so much as economic necessity. The oil price tanked on the international markets. Numerous problems of production, mainly political, in terms of the delta was in a degree of turmoil, people very upset with Buhari election victory, attacks on oil installations and so forth, and the production went down. So you had that double whammy, and that tipped the country into recession, of which it's slowly recovering. So as I said, there's no debate about the need to diversify the economy, and there's equally no debate about the need for high spending on education, training, roads, railways, and power stations. The question is, how do you raise that money? How do you deliver that? The Muhammadu Buhari, the incumbent, takes a very much a dirigiste line. He's a man of process. We've got to get government running properly. We've got to get back. He's a tad recherche, I'd say, back to the days when the civil service was gold standard, and there were days like that, and back to the rule of law. Atiku offers a very much more a sort of freebooting market economy type approach. Just down with regulation. We're going to be the lowest tax economy in Africa within 5 years, and we're going to double the GDP to $900 billion in 4 years. So you've got a pretty clear choice. The advantages each side has in terms of going into this election. Buhari has strong support in the north, particularly in the northwest. He's from Katsina, which is in the far northwest of the country. And in January, it looked like the main opposition party, the People's Democratic Party, was in a fair degree of shambles. There was no consensus around who was going to lead it, let alone, what the policy would be, how to kind of attack Buhari. And Buhari, if those of you who don't know, is a former general, and like Pakistan and a few other countries, Nigeria's politics post-independence have been shaped very much by the military input. And Buhari's claim to fame was he was this stern, ascetic figure who came to power in the 1980s, overthrowing a civilian regime that had been extremely corrupt and inefficient, and brought some sanity back to the finances, and came down very, very hard on civilian politicians who had been corrupt. But he brought so much sanity that there was pushback and was overthrown in a coup by Ibrahim Babangida. So this is his chance, in a way, his mission to come back as a democratic politician to do what he hadn't succeeded in doing before: clean up corruption and diversify the economy. And that's his strongest ticket with the people. That he's particularly in the north, he's still seen as this Mr. Integrity figure. What has happened since then, since January, is that a number of high-level people from the APC, the ruling party, the All Progressives Congress, have defected to the PDP. And Atiku, Abubakar Atiku, who is the PDP candidate, has hoovered up the military, which is a bit of a surprise because he is a civilian. And in fact, he's kind of got his political chops by claiming he's against the military. And here's the big Democrat. He's not only a big free market person, he's a big political Democrat, he says. And what he's done to get that job, he persuaded Babangida, who I just mentioned, a guy called Aliyu Mohammed Gusau, who's one of the kind of recurring decimals in Nigerian politics. He was military intelligence way back, so long ago. I was actually living in Nigeria then. This was back in the early 80s. And he served in Babangida's regime. He certainly helped overthrow Buhari the first time around. He served in Babangida's regime as the head of military intelligence, and then had a somewhat soi-disant relationship with Sani Abacha, who came in the 90s, and then with Babangida and Theophilus Danjuma engineered the demise of Abacha, came back with another general, Obasanjo. Olusegun Obasanjo, who is the sort of quintessential military politician who is, again, I mean, his career almost mirrors post-independence politics in Nigeria. He's been involved in virtually every regime since the overthrow of Gowon. He fought in the Civil War. And that's all to say, his position on Atiku was pretty important. He was jailed by Abacha, came out of prison in 1999 to become president for 2 terms, and Atiku was his vice president. They fell out very, very badly, to the extent that not only did they sort of brief journalists against each other, they actually came out and wrote books about each other. So it didn't look very likely that Obasanjo, despite his concerns about Buhari, was going to endorse Atiku. With an awful lot of engineering and bringing together in that sort of elite packed style, they got together. Atiku came to Obasanjo's base in Ota in the southwest of Nigeria, and in a weird ceremony with an imam and Matthew Hassan Kuka, they kind of consecrated a rededication of the friendship and alliance. I mean, to put it colloquially, I guess Atiku had to eat a lot of humble pie to get that endorsement, which he's quite happy to do. And the reason why is because of Obasanjo's influence across the Southwest. And he's this huge figure. And his major problem with Atiku was the question of integrity. And so for Obasanjo to come in and say, endorse him and give him that, it's been a huge boost to Atiku. So I think one can't underestimate that. Because we'll get onto that a bit later. I mean, the Southwest is going to be the swing region, and anything that's going to help Atiku along that road is going to help his electoral chances. I'd want to say a few words about the APC program. Now, Buhari's chief of staff, Abba Kyari, somewhat demonized by the vibrant Nigerian press as a sort of, I don't know, it's a kind of Alistair Campbell plus type figure, constantly conniving with forces in the shadows. I mean, I think I've known Abba for a while, and truth is a little bit more prosaic. He's a banker. He's an economic nationalist, I think it's fair to say. He's certainly no campaigning socialist radical, for those of you who are worried about that. But he is a Nigerian nationalist, and he says the main problem with Nigeria is all these crooks. Crooks in the big Nigerian companies and their friends who are crooks in the big international companies. And they've come and looted the place over the last 30, 40 years. And if looking dispassionately at that claim, it does have quite a lot of relevance to what's happened. But the looting has happened because the government has been too weak to stop it. And it's sold its birthright far too cheaply. And you're seeing this in this succession of international energy arbitration cases. There's one in Milan at the moment about the OPL 245. I'm very happy to talk about that in great detail. I know a fair bit about it. It's symbolic of what's happened in the country. Deals have been done at the top level, and the resources have been sold too cheap. So that is Kyari's shtick. And it's got a fair amount of resonance. But to be realistic, Kyari is no politician, he's no great orator, and I don't think they're really getting that message across. The big message is trust Buhari is going to sort it out. But people are looking at their own conditions and they're saying, well, maybe he's honest and maybe he is going to sort it out, but my own situation hasn't really improved very much over the past 3 years of the Buhari-led government. The information minister, Lai Mohammed, was one of the founders of the All Progressives Congress, and he is pushing a skeptical line on the other big issue in the economy, which is the one of federal restructuring that's devolving power from the center to the regions. And he's saying that, a bit like the sort of issues I've just been talking about, the management of the oil wealth and all the rest of it. He's saying that's really peripheral. It's a sort of cocktail circuit type argument for Nigerian civil society and the activists in the Delta. Most people, for them, that's not the problem. Most people want to see a better run economy. They're not really worried about the balance of central powers in the federal system compared with the devolution of the state, powers to the states and local governments. Atiku is convinced that is going to get him a lot of support in the Delta and the Southeast in particular, because those regions feel that the center has grabbed all the resources, all the revenues from the oil, and is wasting it on their own failed projects in the center and giving it to their allies, particularly in the north where there are no oil and gas resources currently producing revenues. So that's part of that argument. The polling I've seen shows that there's some truth on both sides, that there certainly is some regional support for restructuring, but the difficulty is, it's a bit like the oil and gas industry bill that Charles mentioned. It's very, very difficult to get a consensus of this. The issue fundamentally comes down to money, like a lot of stuff there, and it's the percentage of extra revenues that the oil-producing states get. At the moment, it's 13. The militants in the Niger Delta want 100%. They want to be like Texas. The oil is ours. It's in our state, and then we get that revenue. We do our deals with the oil companies, and then we hand that. We pay some tax back to the center. That's how we wanted to run it. But the federal government, as I said, 60 to 70% of its revenue is coming from that oil and gas. It's in no mood to allow that. Atiku is playing, I would say, a somewhat opportunist game on this. Told me, I'll give 100% tomorrow. I've got no problem. We could be like the states. And then I said, when are you going to do that? And when are you going to even say that publicly? And he said, well, it needs to be negotiated. And we all know that if they lock down in negotiations where you've got, of the 36 states, you've got about 18 that has no interest in devolving the power down, and the other 18 want to get the resources, you're going to get some form of stalemate, and it's going to be as bad as any Brexit compromise. So just to nip through the Buhari manifesto, it is a state-led strategy. He's talking about 10 million workers being 10 million workers being retrained in I think that should be retrain, not retrain, for the economic diversification program, training up another 10 million in agricultural, ICT, and industry. On the money side, the finance minister, Zainab Ahmed, was here 2 weeks ago, raised the 2.8 billion in Eurobonds, ostensibly to finance infrastructure. The opposition are not happy about that. They said this is no time to be raising large sums of cash, which we don't know where it's going. In fact, it was approved by the National Assembly. The social programs that have been put out by the Vice President, Yemi Osibajo, like the People's Money Bank, which is essentially handing out business loans to the people without going through problematic processes, accused by the opposition of vote buying, and then the pledge to give more than at least 35% of senior posts to women. Just a side note, or maybe a central note here, Nigeria does very badly, given the prominence of women in business life and so forth. They are way underrepresented in politics. You look at what's happened in Ethiopia, where 50% of the new cabinet are women, the Chief Justice is a woman, the President is a woman, Rwanda, South Africa. Nigeria is well behind that. It's well under 35% at the moment. And Rinsola Abiola is a daughter of the late MKO Abiola, who was a seminal political figure in the 80s and 90s. And she quit the APC frustrated by the lack of opportunities for women and youths. Importantly, she didn't actually join the PDP. There's an awful lot of people like Rinsola who say a plague on both your houses. Really, why do we have this choice between Buhari and Atiku? It's just not, it's not worthy of the country. I mean, and that you hear that a lot, in fact. Atiku his campaign looks, although he's the opposition candidate, he is a multi-millionaire, some say a billionaire, and the campaign does reek of money. He has his own, I think, 8 or 10-story block in Abuja. That's been up there. He's had that building tooled up for a presidential campaign for about 3 years now. The last year he's had all these boffins in from the States and London giving him political advice, sitting down with the sort of people from the Nigerian diaspora and the local political activists and so on. So it wasn't too surprising that he got the nomination and he's running this high-profile campaign. They've got a very slick manifesto. A friend of mine said, there must be some place somewhere, maybe in the Arizona desert, where a bunch of high-tech geeks are confecting these manifestos. They all seem to say the same thing. We need a free market, we need low taxation, we need lots of foreign investment, we need honest government. Government needs to get out of the economy and create jobs. And it's 63 pages of that. So it's not the most riveting read, I have to say. But it's well laid out, and it is slick. And for the business community, they're right behind him in Lagos, which is, again, very, very important, not because they're numerically important, but because they're influential. They are the people who give the jobs in Lagos. So if your boss is saying, this is the man who's going to boost the economy, that's very, very important. I have to say that he's put together quite a well-oiled campaign machinery since he won the nomination at the beginning of October. And that's in contradistinction to what Buhari and the APC have done, and they've been floundering. I think seminal moment for Buhari was this question he was thrown at the environmental conference this week in Poland, when somebody asked him about the rumors that he had actually died and had been replaced by a Sudanese body double called Jibril. And as someone said, if you're put on the stage at an international press conference and you're asked if you're still alive, that is literally an existential moment for a politician. So back to Atiku. So corporate taxation the lowest, cuts in state expenditure, near abolition of capital controls, wooing capital through incentives, I love this phrase, orderly privatization. Most Nigerians, pro-Atiku or anti-Atiku, will laugh, and they said, that means an orderly way of giving the assets to your mates. There's a real concern about what happens if he comes to power and he goes ahead with his plan to sell off the NNPC. Kyari's got a very clear-headed view, and he says, sell off the APC, sell off the NNPC, the state oil company. We've got assets of 2 trillion naira, we've got liabilities of 7 trillion naira. If anyone wants to take it off our hands, they're welcome. There is going to be a debate about that, and the debate goes like this. Oil and gas, as we all know, have just come from Paris, and we know particularly well there is a wasting asset. It's not something for the future, whatever the Gilets jaunes might say today. So Nigeria's got to decide when to get out of the game or move decisively to gas and just get rid of the oil. There is an argument that now is the time. Sell it down, raise the money through a totally transparent and accountable process, use the money for the vital infrastructure you need to modernize and industrialize. It's a very respectable argument. I think it's got some validity. But there's a huge argument about whether Atiku is the man to do that and to run that accountably. It's a less questionable argument when it comes to refineries. The refineries are dysfunctional. The biggest entrepreneur in Africa, Aliko Dangote, is building a 650,000 barrel refinery. Selling off the state-owned refineries wouldn't be a problem, I don't think, for many people, apart from those who are making a little turn on their inefficiency. And the electric power transmission is already the actual electric power production system is already half privatized. So selling a transmission system wouldn't necessarily be a problem. The targets he's putting out are ambitious. They're of a Deng Xiaoping level of ambition. 50 million people out of extreme poverty by 2025. So just within his first term, he's going to do this, and creating 3 million jobs year on year. And the interpretation of that is they're formal sector jobs. Right now, of course, they're jobs because there's no social security system. Everyone has to work, or you don't eat. But the question is of the capacity for him to create those formal sector jobs. Most people would question, and there is neither program is costed, and neither program, to be honest, has been subject to direct scrutiny because of the lack of access to journalists to question the candidates one-on-one. That's the oil sector stuff. The cultural revolution is what he's talking about when it comes to restructuring. And he's making the argument that restructuring is going to make for a more efficient economy. So the economic and political devolution he's promising is going to bring the government to the people. It's going to make it more accountable and more profitable. And there is an argument that if your local government has a bigger budget to run education and health and so forth, it's going to be much closer to you, more responsive to your critiques and so on. However, again, it's very, very short on detail. It's these sweeping statements. The other important thing about Atiku's campaign is free the naira, as he says. Float the naira and see what happens. The APC argument is you do that, it tanks, raising inflation, and you go through a crazy transition period. It may be, and as the IMF are keen on pointing out, it may be the best way to go, suffer some short-term pain to get currency stability. But given the very, very slow recovery from the recession in 2016, it's a hell of a risk, and it's a risk the APC certainly is not prepared to take. So what they've got is this sort of engineered depreciation, managed, well, it's not even a managed float, I think it's just a managed depreciation, to be honest, with several different exchange rates, with a fair amount of opportunity for arbitrage and, to be frank, corruption between the various exchange rates. But so that's the naira argument is another key factor. So I said Atiku skirts around the revenue allocation formula. He is an example of the kind of the level of promise he's giving and the lack of rationale. He's saying, right, we're going to have the lowest fuel prices in Nigeria, but I'm going to deregulate it. Well, the reason why Nigeria has, I think after Venezuela, the lowest fuel prices in the world is because the government gives a whacking great subsidy to that, and that's a deliberate policy because it argues we're an oil producer, people expect free fuel is one thing we've got to get out of oil. It hasn't given us much else. And what the Buhari government has done differently from its predecessors is that before the subsidy went through the fuel importers, so it went through these, shall we say, put it kindly, opaque trading companies with a huge markup, in fact. So the reality was the government was subsidizing the fuel trading companies, but not the end price of fuel, because your fuel trading companies took a lot of the fuel to the neighboring countries, sold it for a huge profit, having already been subsidized by the government to sell it cheaply on the local market. So the fuel that was left over was sold on the local market at a market rate. So that was under the former government. Under this government, it's been better managed, I would say. But there still is a whacking great subsidy. And they say that once you take that away, yes, it could be $1 billion a year. It could be, some people are saying it's up to $3.5 billion a year. But if you take that away, then everything is going to go up. I mean, the price of food, the price of the bottled water, just because of the centrality of transport in the country. So there's a real concern. They're not going to do that, but Atiku is making this pledge to deregulate fuel. Okay. I think we can whip through that. I want to sort of round up fairly quickly. I think I've had my half an hour. I think the point about corruption is very important. It will be center stage. As I said, Buhari has this reputation. The Atiku issue is this. Well, it's several issues, but it boils down to about three. He is, as I said, tremendously wealthy. He has a company called Intel's Nigeria, which is a logistics and IT company which has serviced the oil sector since the late 80s and done extremely well since then, even despite his antipathy to military rule. It didn't do badly under the military, actually. So that he was building up this company while he was director of customs. If any one of you have ever had dealings with state customs authorities anywhere in the world, one does realize there's always a bit of opportunity for extracurricular activity. I don't think he was ruled out of that. Then the really tricky issue, which has got into the press a lot this week, is his relationship with a Louisiana congressman called William Jefferson, who was jailed for bribing redacted Nigerian politicians in 2007. The upshot of that was that Atiku was one of the politicians who was demanding money from Jefferson and his wife, Jennifer, apparently. So it was thought subsequent to Jefferson's conviction in 2007, it was thought unwise for Atiku to apply for a US visa because, as they say at the Wonga counter, a refusal to grant your request often offends. So he knew that if he went through the system, he wouldn't get it. There was some sort of bar on him getting one after this case. That became a sort of key of the APC's attack on him, saying, well, look how corrupt this guy is. He can't even get into America. Sorry if you're American. So he has been working very hard with his US lobbyists and lawyers to, as they say in DC, let's work around this. So last Tuesday, he walked into the US Embassy in Abuja and applied for his visa. Now, social media's been full of the fact he's got the visa and he's going to get to Washington, he's going to see Donald Trump and he's going to have a great meeting and Trump is going to say, make Nigeria great again. He's going to come back and he's going to win the election. That's the Atiku narrative. The opposition, and some American officials I've been speaking to say, look, nothing's been decided. It's a process. You can't just sort of bamboozle us with this stuff. We're going to make our own decision based on our own national interests. As I understand it, the block on his visa is Homeland Security. He's kind of, shall we say, he's persuaded people in the State Department that he should have a visa. And I think the reality is, it's like Narendra Modi, who was denied a visa before he became Prime Minister of India for human rights abuses, etc. If Atiku wins the election, he's going to get into the States. There's no question about it. But the important thing for now is it's become a sort of symbol of his integrity if he can get into America, get this visa. I think actually he's currently in this country. So it might be possible to go and see him and ask him if he's got the visa. Because the idea is that as soon as he gets the go-ahead from Washington, he's going to get into his limousine, off the Heathrow, into his private jet, straight to Washington, and go and see a number of high-level American officials, and it's all going to be a big media campaign, and it's going to do him great good. I think at this stage it's probably good for me to wind up. I'm sure you agree with that. And I'm very happy to ask questions, and we can get into any of the subsequent detail. But as I said, I think it's going to be a tremendously interesting and important election. And I do think, despite all the cynicism we have about politicians ducking the issues and so on, it is going to be an election of issues as well as personalities. I'm not denying that the sort of choice between Atiku and Buhari is a very clear one in terms of personality and history and so on. But I think there are some very, very important issues, the people behind them. Oh, just one last point I should make. And a lot of people I've spoken to say the sad thing about this election in Nigeria is that the running mates are not the candidates. Both the running mates are of exceedingly impressive. Yemi Osinbajo, the vice president, is a law professor, and he was Attorney General of Lagos. He presided over the turning around of the finances of Lagos State, whacking up the state taxation system, funding real improvements to the state system. He's a very committed guy. He has a primary education project. He is really he's a team leader on the economic side as well. So he, very, very capable and very serious, committed guy. Ditto, Peter Obi, the former state governor, was one of the few governors to leave more money in the state treasury when he had done his 2 terms than the money he found when he came. He has some of his kinsmen have complained. His reputation for stinginess with state resources, which actually in the bigger picture in Nigeria is regarded as a huge character asset. So I'd say, that's probably a parting shot. If only the deputies were running, you would really be confident that whatever happened, you'd see some positive change. But the fact that they're in the frame, and I think they're both going to be very, very important in policy formation and the direction of the country, I think is a very good sign. Thank you.
Thank you very much, Patrick, and thank you, Paula and Charles, for having me. I think I have far too many slides, so let me try to jump through these pretty quickly and try to get to the Q&A, because that will likely be the most interesting part of my presentation, at least. So I will sort of go through just a brief introduction, the economy by the numbers, the bad of the Nigerian economy, the good of the Nigerian economy, which in a way is actually very much tied to the bad. And I think you'll see that when I start repeating the same slides. And it's really what narrative you want to tell. I think a lot of the story in Nigeria, especially if you think about the exchange rate, for example, is really, do you want to approach this from a negative narrative or from a positive narrative? On one hand, for example, and I'll go into more detail on this, you could say Nigeria has a long way to go in terms of achieving a free and floating exchange rate. The current system of multiple windows at multiple rates, which different actors are accessing, is creating a level of distrust. It's harmful for the economy. It's certainly not what the IMF wants. But if we think about where the exchange rate was, say, 24 months ago, when there were 11 different windows, you had students going on Hajj, accessing dollars at very subsidized rates, you had oil marketers accessing dollars at different rates, etc. I think it's been a vast improvement. So it's really the question of what is our starting point, and really what is the narrative that we want to frame around these issues. And hopefully some of my slides will make that a little bit more illustrative. And ultimately I will end up with the conclusion, hopefully try to relate this to a little bit of what Patrick was saying in terms of the actual electoral politics in the country. Unfortunately, Paula started off the presentation by saying that hopefully we'll provide some clarity, and I think the more you study the Nigerian economy and its politics, the less certainty you'll have about anything. So perhaps if I do my job well, you will walk away feeling like you know less than when we started, but that, I assure you, is actually a good thing, because you'll be able to impress people in the pub with all these factoids as to why it is that that's actually the case. And then ultimately we'll have the Q&A, which, as I said, is likely the most interesting part anyways. So, starting off the introduction, so following the declines in oil prices beginning in 2014 and lasting through 2016, this led to Nigeria's first recession in 25 years. Since then, we've had rebounds in both oil prices and production. That was really in the start of 2016 and throughout 2017. This has led to an increase in growth, although it's still very subdued, but at least the country is out of the recession. We've had various currency devaluations that made the country more competitive. However, pass-through inflation led to a decrease in real wages for many citizens. Especially if we think about real economic growth being at around 2.5%, with per capita growth being at about 3%. On a per capita basis, Nigeria is actually falling behind year on year. So there is still a huge amount of slack in the economy that a lot of economists are hoping that we can see being reduced and closing that output gap. The IMF suggests that Nigeria will continue to muddle through over the medium term. And I think this term, muddle through, this was the term that the Nigerian mission chief told to me about 2 weeks ago when I met him in Abuja. It's the term that comes up over and over again in the country's Article 4 report. This is really, I would say, from the economic perspective, the single biggest sort of narrative or catchphrase that really summarizes the economic position that we're in, and especially the medium-term outlook, unfortunately. So things are better, but the expectation is that things don't dramatically and structurally improve really over the next, say, 2 to 5 years, and we just have this kind of muddle through where it's just a little bit more of the same. Now, if your baseline scenario is 2.5% growth, it's not ideal for a country that, again, has this large output gap, that has this per capita growth, that has the vast labor potential of a country like Nigeria. But if you think about what the type of growth rates that we see in developed markets, it's not that bad. So again, it's really what is the narrative that we're trying to tell here? On what side of the fence are we on? Because there's very clear arguments to sort of pick and choose from to really create this narrative. And over the long term, the country faces major structural challenges, primarily related to lack of capital expenditure, poor infrastructure development, and mass unemployment. So, by the numbers, Nigeria's population is about 200 million. Per capita, current GDP is about 400 billion. So if I did my maths correctly, that's about a per capita GDP of $2,000 per person. That puts it at sort of the very lower end of the lower middle income countries. Real GDP growth is around 2%. The current account surplus is 2%, so that's a positive. The fiscal deficit is about 5%, that's bad. Debt to GDP at 25% is actually quite low. That's actually one of the positives. Gross foreign reserves at about 45 billion. That's nearly 3 times where they were in 2016. So I would say that's a positive as well. Revenue to GDP, and I think this is really the biggest story. This is really sort of the fiscal story here, is at about 5%. It's the lowest in the world, and this is really what drives almost all of Nigeria's structural issues. The debt service to revenue ratio is 60%. It's absolutely abysmal. There's a term that we refer to as fiscal space, which basically refers to the amount of capital left over after a country fulfills its obligations, combined with sort of the debt borrowing capacity. So ultimately, how much money can the country get its hands on today that it could actually spend and make use of in terms of capital expenditure? You can see with 60% of their revenue being eaten up by the interest component of their debt alone, there's not a lot of money left over to actually spend on this capital expenditure to really develop the infrastructure that the country needs. Now, there's 2 ways to think about that ratio. Obviously, you have the numerator, you have the denominator. The debt service component is quite large, but really the main driver here comes back to the revenue to GDP ratio. Because revenue is just so low, that is the reason why so much of it is getting eaten up by the debt service, not necessarily by large debt service. And I'll go into that in a little bit more detail. Key exports, crude petroleum at about 73%, petroleum gas 15%. So ultimately, oil products make up about 90, I should specify that's unrefined oil products, make up about 90% of the country's exports. Key imports, refined petroleum, and that is another big issue. Why does a country that produces so much crude petroleum wind up having to import so much? So, the bad. Nigeria's economy is invariably linked to oil, making up roughly 10% of total GDP, and that makes up probably 30 to 40% of the formal GDP. So, about 70% of Nigeria's economy is actually in the informal sector. Unfortunately, that's not being taxed at the moment. Again, that leads to that small revenue ratio. But this is this is the MIT Atlas, in case any of you have ever looked at their website for imports and export data. It's an excellent website that I can recommend. But this is one of the starkest export pictures that I've seen of any country. you can see that oil is the single largest driver far and away. It really dictates everything that happens in the economy. On the import side, things are much more varied. Of course, the single largest import component is refined petroleum. And the reason that that's bad is because we have this reliance on importing refined petroleum, and it's very costly, especially if we think about the federal subsidy on the end user price that Patrick already talked about. So if we think about the average fuel price, sort of pump price across sub-Saharan Africa, here's this chart. The average is about $1.1 per gallon, so actually still relatively cheap versus what we think about in the US or in Europe. But where's Nigeria on this chart? It's right there. All the way at the bottom, as Patrick mentioned, it's the second cheapest fuel price in the world behind Venezuela. Things obviously aren't going too well in Venezuela either, so if you think about the correlation there, that's not a promising story. Petroleum is priced at a flat price of 145 naira per liter, so that's roughly 30 pence. So the story here is that Nigeria winds up exporting nearly all of its petroleum. It doesn't take full advantage in an economic return sense because it winds up having to pay the spread to re-import the refined product, which it then sells to its population at a very subsidized rate. So despite being one of the wealthiest oil countries in the world, the amount of economic loss generated by the oil sector is actually staggering. Now, there are a few structural potential breaks that are coming in the near future. That is Dangote's refinery that is slated to come online maybe 2021, maybe 2022. At one point, it was slated as being the largest single refinery in the world at about 900,000 barrels per day. That's been revised down. Now the target is around 650. That would still take care of all of Nigeria's domestic needs, plus about an extra 100,000 barrels to spare. That, in terms of what it could do to the current account, what it could do to the fuel subsidy, what it could do to really the economy as a whole, has absolutely enormous potential. The problem is, this is a perverse sense of the private sector crowding out the government. We've heard many stories from free market economists over the last 50 years about government crowding out and the private sector being harmed, and that's what causes lack of economic growth, and the socialist monsters are going to come and eat us up. But we don't really have many examples of the private sector crowding out the government. When Dangote really has a monopoly on the country's refining and really has a monopoly on the country's political say on what happens to the oil situation, what does that mean for the country, especially if he doesn't want to sell to the government at a subsidized rate? He's already building a deep water port so he can export his own refined product. There is no need for him to keep it in the country. So we don't really know how this plays out. It's a fun narrative to talk about how things are going to be rosy once the refinery comes online, but in reality, we don't really know how this plays out. Given Dangote's very successful track record in business, there is no way that he comes out of this without making a tremendous amount of money. The question is, how does he do that most efficiently? It's likely that he does that via other export channels and not selling directly to the Nigerian federal government. So here's what happened to oil prices. That very steep line was the very end of 2014. It was really into 2015 and 2016 when we had oil that hit about $28 a barrel at its low point. So what does that mean for the Nigerian economy? So you have to bear with me. I was trying to show three different series on a chart with two different axes, but basically the gray shaded area is oil production. We can see that in 2016, it fell dramatically right here. Combine that with the oil price, which is shown on the right-hand axis. And then this is kind of on a different scale, but this is what happened to oil revenue. From this point right here, about 18 months later, about 2/3 of their oil revenue just disappeared. So what does that mean for economic growth? Actually, I think growth comes later. So you can see what happened to the current account, which historically was always in a surplus. It very rapidly turned into a deficit in 2015. It has since rebounded, but remains at subdued levels. The reversal in capital flows at the same time, really based on the perception of the country from an equities standpoint. That's the foreign portfolio investment. From an FDI perspective, at the same time you have the current account deficit, wind up leading to a tremendous fall in foreign reserves. Again, from about 45 billion in 2013, 2014 to just around 20 billion in 2016. What did the federal government, especially the central bank, do in response to this? They wound up having to devalue the currency. So we can see that the blue line here is the official rate of the naira. I think I have a pointer, which is around 200 naira to the dollar all throughout 2016. That was officially devalued to 305 in 2016. And then later we had the introduction of the INE window, which has effectively taken it to about 360 or 365 in April of last year. Now, it's not so much the devaluation itself, but it's really the differential between the blue line and the gray line that's important. The gray line shows the real effective exchange rate at fair valuation. So based on the inflationary differentials of the country versus its main trading partners, based on a trade-weighted basis, where should the currency trade if it were freely floating? So we can see in 2016, the naira should have been already close to 300. The naira was officially at 200, so it was an overvaluation of about 50%. Obviously, that makes the country very uncompetitive in terms of its exports. Also, if you think about how consumers across the country are spending their money, if the naira is overvalued, it makes imports significantly cheaper. They wound up importing far more goods, especially on the agricultural side and luxury goods, than they should have. And that, again, combined with the fall in oil prices, the fall and decline in oil production, ultimately led to that reversal in the current account surplus and turned it into the deficit. The devaluation, while likely being a positive in the long run because it makes the economy more competitive, the short-term effect was that we had this massive spike in pass-through inflation. Basically, all imports immediately become more expensive overnight. The problem is in a country like Nigeria, you don't have the export response that you would like to see, because the truth is Nigeria just really doesn't export anything other than oil, and oil is already priced in dollars. So it doesn't matter what you do to the currency when 90% of your export base is already taken out of the equation. And ultimately, this is what we had in terms of GDP growth. The country was growing at an average rate of between 5 and 6% for about 5 years before 2016. It plummeted to minus 2%. Now, we've since rebounded, but again, we've rebounded to about that 2% mark. And this is the expectation over the medium term, where we just expect to muddle through. This blue shaded line here is the World Bank forecast of the sub-Saharan African average. So you can see that Nigeria lags behind about 1 to 1.5% behind that average. So despite the rebound that we've seen in oil prices, and Patrick already mentioned that oil makes up about 65% of federal revenue, we haven't really seen a vast improvement in the overall fiscal and primary balance of the country. Historically, the country always ran fiscal deficits. That's sort of an assumed given. But you can see in 2014, the primary deficit was only about 1%. That widened to over 4%. And we're now somewhere between 3.5 and 4. So we really haven't seen that improvement take hold that we would have expected following that rebound, that sort of the improvement in the larger oil story and that rebound in growth. Now, this is very scary, but the part here that matters is the primary balance component of this very long scary formula. But why does it matter that the country continues to run a primary balance deficit of about 3.5 to 4%? And for those of you who are very comfortable with your equations, you'll look at this and you'll instantly realize the primary balance has a 1-to-1 relationship to the debt to GDP ratio, because ultimately what that means is we expect the debt to GDP ratio to increase by about 3.5 to 4% year on year, ignoring economic growth, ignoring interest components, solely based on the federal deficit that the country runs. And again, there just isn't any revenue being generated. And so, as I mentioned earlier, the debt to GDP ratio in the country is actually still quite low. That's a positive. But the negative story here is that it's expected to increase quite dramatically, reaching about 30% over the next 4 years. So this is, again, one of those situations where you can kind of take a step back and really think about what side of the fence are you on. You could very much sort of spin this into a positive and say, yes, debt is increasing, but it's still expected to remain below 30% over the next 5 years. That versus its sub-Saharan African peers is actually one of the lowest ratios in the entire region. This is a very promising story, But if you take that more cynical view of this, you can say, yes, it's low, but that path is clearly upward sloping, and there isn't really any clear plan on how we manage to keep that debt situation under control. So the Debt Management Office has recently begun a large-scale switch from expensive domestic debt into cheaper, longer-dated dollar debt. So Patrick mentioned that about 2 weeks ago, the Debt Management Office issued about $2.8 billion in euro bonds. So that's dollar-denominated debt. I was actually part of the IMF team that recommended this to the Central Bank of Nigeria and the Debt Management Office back in 2017. I think the perception from most investors, including the IMF, was that this was a very positive move when they started doing this operation in 2017. You can see the amount of increase in dollar-denominated debt. I think what people weren't expecting is the amount of increase that we would see continuing throughout 2018. So we went from under $2 billion in dollar-denominated debt in 2016 to about $11 billion outstanding now. So that is a massive ramping up in just a 2-year period. Obviously, that exposes the country to more dollar and FX risk, which of course makes them even more reliant on oil, as that is really the only source of dollar inflows into the country. Here's that scary component or scary equation again, but now we're going to focus on the interest component. The problem, as we already mentioned with the debt service to revenue ratio in Nigeria, is if we look at this chart, the blue bars are the principal repayments on the dollar debt that's coming due. It's obviously increased dramatically over the last 2 years, but it's still spaced out fairly nicely. The yellow bars in the upcoming years really make their repayments rather difficult. I think that is the story. And again, if you think about what this does to your debt to GDP ratio, we had that equation right here. The interest component winds up adding to your debt stock. So again, the expected path of debt increase and debt accumulation winds up increasing at a faster rate based on the additional interest that you take on. As global interest rates keep rising, as the debt stock keeps rising, interest cost keeps increasing without any plan to increase the federal revenue. The debt to GDP ratio will just keep increasing. Now, the good. Let me go through this very quickly. Again, Nigeria's debt to GDP ratio remains one of the lowest in the region, even with the vast increase that we've seen over the past few years and the expected increase between now and 2023. It will remain the second lowest across these group of selected countries. Oil futures suggest that oil prices are likely to come down. Obviously, we've had sell-offs in the past few weeks. That being said, the expectation is that they will likely hover around $60 a barrel. Nigeria's break-even price for oil, there's a lot of debate about this, so no one is exactly sure what that is, but it's roughly $40. So as long as oil stays above $50, I think Nigeria is in a comfortable operating position. And ideally, what's even more important for Nigeria than having high oil prices, as we already mentioned, the loss that they make on re-importing refined petroleum at high oil costs actually winds up hurting them quite badly. So in a way, you have this sort of natural hedge built in already, but having stable oil prices that actually allows the business environment to predict for that and the federal government to actually forecast accurately, to really set its expenditure targets and revenue targets, is arguably more important than having high oil. Again, assuming that's, say, above that 50% or $50 per barrel range. The demographic dividend in Nigeria is absolutely enormous. If we think about where the working age population is in Nigeria, and then you think about how many of the people in the working age population aren't even working due to unemployment, which the unemployment data comes out tomorrow, which has been delayed for the past 3 years. So no one expects those numbers to be accurate, but we expect them to be pretty dire, which at least in a directional sense will point to the problems that the country is facing. But at the moment, there are very few people in the country that are sort of between the ages of 18 and say 50. The majority of the population is down here. The question is, what happens to the economy when birth rates decline? This group of the population winds up moving into the working age, and the dependent age population, so that's the youth in the country and the elderly in the country, as a component, as a share of total population, winds up decreasing. Nigeria has absolutely enormous potential. If you think about a Cobb-Douglas equation, the impact of capital and labor on economic growth, that labor component is absolutely huge. So these are sort of the repetition of the slides that I showed before, which when I was talking about the bad of the economy, obviously we're talking about that trough. But now the positive is that we've had this rebound. So we've had the rebound in oil prices, oil production. This has led to a rebound in the current account. We're now back in a surplus. Obviously, it's expected to fall a little bit over coming years, but we're in a much stronger position than we were, say, in 2016. Capital flows have led to this mass reversal in foreign exchange reserves, again, coming from about 20 billion in 2016, 2017, to a peak of about 45. That's come off a little bit, but these numbers are from October. They don't include the $2.8 billion issued in Eurobonds, so that should take them back up to about 45. We've had the depreciation or the stepwise devaluation of the Naira. So there's still a long way to go. This is something that Abukar has obviously talked about in his platform of freely floating the Naira. I think a lot of economists would very much welcome this idea. But again, we've come a long way. This has been a vast improvement from where we were. And if you think about the real exchange rate overvaluation now, it's only at about 5%. So it's not ideal, but it's a lot better than where we were before. If we look at the rear, under, and overvaluations of the same selected African countries that we saw before on the debt to GDP ratio, we can see Nigeria is here with that red bar. Yes, it's overvalued, but if we think about countries like Congo, Tanzania, or Kenya, especially Kenya, who's posting economic growth of, say, 6%, it's the darling of East Africa. No one ever says anything bad about Kenya, although I have my concerns. That's a separate topic. Nigeria is actually, from a currency perspective, a lot more attractive. So ultimately, over time, we would expect to see import compression. That reliance on imported food as domestic agriculture starts improving should wind up making the country more competitive. That should lead to economic growth. That should lead to a further increase or improvement in the current account. Export substitution should take place, but again, unfortunately, because 90% of the country's exports are already dollar denominated, I don't think we really see much on the export side. Really, the improvement would come on import compression. Inflation, again, this is year on year, but if we think about the monthly year on year, or sorry, this is annualized data, but if we think about monthly year on year data, inflation peaked at 18.72 last January. It's come down to around 11.2 since then. So inflation is still high. Obviously, you can tell that negative story, but we've had disinflation of about 7%. So it's really a question of what's the narrative that you want to tell. Inflation is expected to remain relatively high, or sort of around the 11% range over the immediate future. That will also be very much related to what happens to the currency. Again, we don't exactly know what happens post-election. If the Naira floats, I expect further depreciation. That would wind up leading to further inflation. Again, all this makes the operating environment in the country relatively difficult. But we've had the big shock already. So we're, again, in a much stronger position now than we were 2 years ago. Obviously, we had the recession in 2016. We've had the rebound. But again, growth expectations remain at 2% over the coming few years, and there's no real structural breaks other than, say, the Dangote refinery coming online that would really change any of this dramatically. And again, we don't really even know how that winds up playing out. So we have slight improvements in the primary and the fiscal deficit being projected, but again, it's all relatively subdued. So what are the takeaways? As the IMF has stated, we just kind of muddle through. We see slight improvements in the current account, or we've already had those. The current account surplus actually winds up decreasing a little bit over the coming few years, especially with the expectation of oil prices. Growth remains flat at around 2.5%. Capital flows, this actually I think is a positive. I think there's a lot of capital that has flowed out of the country over the last, say, 6 months on the back of political uncertainty, election uncertainty, recent declines in oil prices. I think a lot of capital would be willing to re-enter the market after the election. I think the expectation is that we would likely see more coming in under an Abukar regime that is arguably more welcoming to sort of free market and business practices. There's no real reason why, if you are a multinational corporation, why you would look at Nigeria at the moment and say, I'm going to send $500 million into the country now when I could just wait 4 months and wind up having it being ring-fenced and not exposed to domestic taxes. Even if Buhari wins, I think you likely see some of that money coming in as well, because even though it's not the ideal operating environment that you're potentially hoping for, at least you have the certainty that this is the reality over the next 4 years. So I think we see sort of a boost in improvement in capital flows, a slight improvement in GDP growth in 2019. A lot of that is on the back of election spending, that's fiscal slippage, which from the federal perspective is a negative because it winds up leading to larger deficits, larger debt to GDP. That leads to larger borrowing and interest components in the future, which makes the situation even more unsustainable going forward, but it winds up translating to some additional growth in the near term. And really the challenges include the political uncertainty between now and the election, fiscal deficits, the crowding out of the private sector. Because the deficits have historically been so large, the federal government wind up over borrowing from the domestic market. Interest rates in the domestic market now for the government on treasury bills are around 14-15%. If you are a private lender or a private borrower, you're realistically not borrowing at anything under 20%, maybe even in the 30%. As a result, private sector lending has just completely ground to a halt. So until we see some improvement in the federal fiscal deficits, I don't think we see massive sort of private sector coming back to the aid economic growth. And that was the conclusion, and hopefully that was quick enough. So now I think I'll turn it back over to Paula for the Q&A.